This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.
Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 187. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on Apple Podcasts. It really helps provide feedback for me and spread the MicroCap message. We are officially now 1 week away from the SNN Network Summer Virtual Event 2021. The full event agenda is now live. Check out to see the themes and topics for all the keynotes and panels, as well as the latest list of the presenting companies that will be joining us. Booking one-on-one meetings with our presenters is also now open. So if you're thinking about participating, now is the time to register, set your schedule and availability. If you'd like to participate, please click the register button when you go to our website, which is conference.snn.network. You will have access to all company presentations, keynotes, and educational panels directly on the conference website on each day of the event once you are logged in. And you will also be eligible to request and conduct one-on-one meetings with presenting company management teams. To register, go to conference.snn.network and click register. I look forward to seeing you all there. Now, for this episode of the Planet MicroCap podcast, I spoke with Jason Greenwald. He's a full-time private investor who, as he says on Twitter, used to only buy real estate at foreclosure auctions and has advanced some since. I've known and followed Jason for a long time on Twitter, and it was only a matter of time that we had a chat on the pod. And we discuss everything, real estate, stocks, and most importantly, we commiserate on our respective favorite sports teams. Thank you again for tuning in to episode 187 of the Planet MicroCap podcast, and please enjoy my conversation with Jason Greenwald. Back, everybody, to the Planet MicroCap podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is a gentleman who I've known him on Twitter. It's one of those classic, Twitter back and forths. And I've always respected a lot of what he's put out there in the Twitter universe. And I know he's a full-time investor, both in stocks and also real estate. So we're going to have an all-encompassing type conversation. Hopefully we don't just get hung up on sports because I decided to wear a Rangers jersey today and he's a Caps fan. And without further ado, I'd like to introduce Jason Greenwald, full-time private investor. Jason, what's up, man? How you doing?
What's up, Bobby? How you doing, bro? I'm so happy to be on your show.
I'm excited to have you. And listen, like I said in the opening, we're going to promise not to do too much sports talk. But I
can't make any promises, dude. You're throwing a New York Rangers jersey right in front of me, and you say I can't say anything to that? No. Well, that's fun.
Yeah, no, that's for sure. I mean, look, I'm wearing a Lundqvist jersey, and for those who don't follow NHL, I can't even say I follow it as closely. He was signed by the Caps after the Rangers released him, and then he never laced him up. I'm sorry, man.
I'm just shaking my head here, sulking and crying.
I'm so sorry. And this has actually been a tough time for a Washington sports fan. Actually, your thoughts on the Westbrook trade? He's coming out my way.
He wasn't going to be here that long, bro.
No.
He was going to be here for a cup of coffee, wham, bam. He wasn't going to stay here. It's a bad team. Bradley Beal doesn't want to stay here.
But he keeps saying the right stuff. He says he loved, his family's comfortable there. Is it word service or what?
Oh, he's not staying here, man. He's gone. He's gone. The team will be bad. They won't win the E. for the last 30 years of being a sports fan here, it's been brutal. Our football team was good when I was about 5 or 6 years old, and then it stopped. So it's been 28 years of hell.
Well, look, you at least have gotten to celebrate a Stanley Cup
Yes.
in the last 10 years, 10, 15 years. All I have is heartbreak and my wife rubbing it in my face because she's a Kings fan. So, yeah.
Oh, I did not know the Kings part, man. I'm sorry.
Yeah, no, it was. See, look, dude, you're not the only one.
But you guys had Gretzky and Messier.
That was pretty awesome. I'm not gonna lie. That's when I became a true hockey fan. Is
That was pretty
awesome. when you became aware, we can all point to that time in sports when you became aware. Baseball was Derek Jeter 96, hockey 98 Gretzky.
Yeah, I mean, you New York people don't have anything to say anything about for a long time. No.
I'm not complaining. I'm not outwardly complaining, but I mean, I enjoy it.
You would like more.
We would like more. Is that so much to ask?
I think the Knicks have probably the longest. I mean, that's some trouble.
I mean, we'll see, dude. It just depends on who they get. I'm kind of in the camp of I prefer not to get one of these older point guards for a 3-year stretch run for
$100 million.
For $100 million, and then what? We're gonna trade everybody away to get Dame or Bradley Beal that? No, I like RJ. I like Randall. Let's do another year. Let's see what happens. Guess what? I don't even mind if next year's a shit year because then maybe we get a lottery pick and the next year's draft's supposed to be good too. So.
And it doesn't even matter because the team in the West will probably win anyways. I mean, the Lakers, the Clippers. Yeah,
it's fun that we're competitive. Don't get me wrong. This year was a super fun year to be a Knicks fan.
Yes, yeah. I can see that.
All right, okay. I think we've exhausted our audience on sports talk. So let's.
Sorry, Fintuit. I'm sorry.
Yeah, Fintuit. We're really apologetic. I should just start another pod that's more like our sports and investing talk. But anyways.
Anytime.
All right, here we go. Jason, let's get into it.
Yes.
Where would you say this is a quick transition? Where would you say your passion for investing began, man?
Well, to be honest, I'm a little unusual in the sense that I don't have a CFA or an MBA. In fact, I haven't even taken a formal class in business. So a lot of investing for me was kind of sitting around the dinner table, hearing stories that my grandparents had some properties, small time stuff like 4 or 5 ramblers. And then that kind of grew and it didn't turn into much until 2008. I graduate from college in May. Don't really have anything to do, frankly. I mean, didn't have a job lined up. I could have done a couple things. And then a family member wants to buy a friend's house at foreclosure, as a favor to him. So I attend the auction. I see what goes on. I see the dynamic of 3 investors for 100 houses. So you had just a big forced selling happening. And I didn't really think a lot of it. And one thing leads to another. And I have about $5,000 to start off with. I buy a condo for $5,000, which is crazy that you could actually buy a property for $5,000. But in 2008, you could.
Hearing $5,000 for a condo.
So I automatically wholesale it to someone for $39,000. I didn't even have to clean. I didn't have to do anything. I saw the house before, the condo. I knew it was clean, so that 5 turns into 39. And then I pay taxes on that, and then I pretty much used every penny from that, so about 30. And then at that time, Bobby, you could buy a single family house that's now worth $380. Then you could purchase it for $40. The comps were crushed, and it was just an aspect that like no one wanted houses. I mean, it's not like how it is now. I mean, we've come the full circle. So I use that 30 and I partner with some other person, and I'm the buying and selling aspect. So I get half of the deal, but I don't have to put up half the money. So at that point, I find someone who wants to buy each house for 120 each. So this 30 turns into 120. And this is in the span of about a year and a half. So to make a very long story short, from 08 to 12 was basically me building the capital required to have plenty of rental houses to provide I call it a cheap man's float. So people hand you rent, you pay your expenses, and then you have money. And that was the goal anyways. And it's taken a pretty long time, but here we are. So over 13 years, it's come to the point where I have some float and I have to use it. Prior to COVID, when properties were normal, or I guess normal for the time, I could just buy houses. And stocks was something I knew about. Stocks. I had some Berkshire, which I have still, and some Altria, which I have still, but was not a stock person at all. I mean, I didn't know about shares outstanding and all of these terms I didn't have a clue about. So, and then Corona hit and the foreclosure moratorium starts. And I've had about a year and a half to brush up on the stock part of things. So that's kind of how it happened.
Gotcha. Dude, I mean, I was going to say this one for later, but I have to ask you now, like, what has it been like, dude, as a landlord for the last, 18, 20 months?
Yeah. I've been very fortunate. All of my properties are rented through the Baltimore relocation housing program. And so I get rent that just comes into me. So it's like a direct deposit. So I was shielded from a lot of that part. Some people have gotten lucky that the tenants are paying, and some people don't have. I mean, it would not be the time to have low quality tenants and be highly levered. I think there's a possibility that smaller time landlords with high debt could have a problem because, right, like someone has to pay. I mean, so it's either the bank, the tenant, or the landlord. So for me, and I kind of structured all of this kind of on purpose. Like, it's not like I knew that COVID would happen, but I like the aspect of a direct hit of cash. And I probably charge 5 to 8% less than I could, but I understand that. And for time, I mean, I can't tell you in times like this, but in times like this, it's helpful. So thank God for me, I've been shielded off, but there have been people who haven't been quite as lucky as me.
Absolutely. I mean, so in terms of looking at new potential places to buy, by the way, I was just adjusting my shirt. I didn't want to like rub it in your face or anything.
Nice chesty, man.
So, I mean, in times like these too, when you're looking to potentially deploy cash, I mean, has there been anything? I mean, I know stores in California, but like,
yeah, I mean, so the properties, so all of my properties are actually in the same neighborhood. They're actually on the same street. So I'm pretty concentrated. Like once I really like something, I like them. So I was buying these at like a 14% cap rate, non-levered. And now they're selling for 5. So, like a 5 or 6. So for me, I manage the properties. So I need to take up. So for me to go through all that, and like I tweeted this morning, I had to call the plumber, for a problem. I need to get paid to take on that Michigas, like all that crap. And so for me to make 6% where I could send my cash to Berkshire Hathaway or to fill in the blank and make 8, to me, that seems a lot more appealing. So I can tell you straight up, I have not bought anything to rent since early to mid 2019. So it's been 2 years. I mean, COVID it's kind of misleading. And that was like a private deal through the previous homeowner, but it's been, and there are some foreclosures happening. Those are on non-FHA mortgages. And what's happened is, Bobby, is you now have a dynamic of 50 bidders for 3 houses. It's the total switch to how it was in 2008. So it's been interesting for me to see how that's changed. It got particularly harder when COVID happened. I don't know the amount of euphoria from people at the auction is something I haven't seen before. Now, granted, I started off pretty much like in the stock version of the 29 crash. So I guess a person could say like you started so low that anything higher is higher. But it's pretty interesting to see that change.
Just putting our crystal ball hat on. With the moratorium on evictions, well, it's supposed to end. I think like what a week.
I believe it was supposed to be. I thought the end of August, but that might change, and it has to go. So certain states have certain laws in terms of foreclosures. So Maryland has very different than Virginia, that has different from Georgia. But sorry, go ahead. I'm sorry.
No. I was just going to say, like, what do you see that there's going to potentially be more opportunities to deploy cash because there might be some more foreclosures, or like what's
it's going to be interesting. It's going to be interesting because it's not all going to hit right at the same time, right? So in Virginia, there's no court process. So they can start foreclosures in probably 3 or 4 weeks, right when it's the moratorium's over. In Maryland, you have to go through a court process. That can be 3-4 months. So they're not all going to hit right at the same time. It's going to be like you go, then I go, then you go, then I go, then you go. It's going to be very interesting to see. I wish I had the answer, or else I would have a country probably. But I know there's a supply and demand imbalance, and that's been since 2008. And I think Twitter's been pretty vocal on that. I will tell you the low end of the home ranges here are starting to get extremely high. And I don't really know how that leaves the small guy. I mean, in the county I'm in, to get a single family home that's decent, you're spending $500,000 plus, which in some parts of the country is not a lot of money. In certain parts of the country, that's a ton. So I don't know what will happen. I know enough to know that I don't know. I would say that interest rates could be pretty interesting. I mean, who knows if they're going higher or lower? I have no idea on that. I will say that if they go higher, it would make prices of homes, I would think, not go up as purchasing power is crushed.
Right.
I don't know, man. I wish I knew how this thing would play out. I would, if someone put a gun to my head, it won't be like 2008. The underwriting in 08 was just a joke. I mean, you had people that literally didn't have to, people were just writing incomes and just like qualifying for houses, where in 2020, 2021, that's not the case. So I don't see a crash happening. That doesn't mean that prices can't cool down some, but it's funny, like right when Corona happened, all of my real estate people were chatting, and we thought by now there would be more foreclosures than you could ever see. And prices from then would go down 20%. Well, from that conversation, the prices have increased about 25% or higher. So I can't predict anything. I just don't have a clue, man. I will tell you, I don't see a 2008 happening, but that doesn't mean we can't have a little cooling off period too.
Right. Yeah, no, like like one of the things I was excited to talk about was like what's some of the dynamics in real estate, just because I'm such a dumb about it. And like, and also my own family, like they're in on my in-laws side, they're in a residential construction. And it's just interesting to see some of the dynamics going on, even in LA and different parts of the city where, you know, everything that's on the market from 1 to 3 million is like 20 offers, cash, like, let me take, you know, and these are homes that are probably selling for 20 to 30% higher than what they were listed at. But meanwhile, there's some areas of the city, like in Venice, like Marina, Santa Monica area, that are, you know, it's a little bit harder. I mean, above, I'd say the 3 range, because of some of the dynamics going on with like homeless and just people not leaving, you know? It's pretty interesting.
Yeah. I mean, here the prices aren't quite as high, but the only thing I don't see moving quickly are condos. Condos are pretty cold. If you have a high rise and you're on like the top 3rd floor, then you're okay. But condos are pretty cold here. But like, I talk to people in South Bend, Indiana. I have a friend there. His house was $225. In 2 days, he had 22 offers. So like, it's like this everywhere. So I just don't know how this whole movie will end. See, for me, like, I think my head is a little tainted because I saw the 2008 crash so hard that you always think it's going to go like that again, and it probably won't. I mean, that was a once in a 50, maybe 100 year event. But I'm tracking the foreclosure delinquencies every quarter. They've been going down consistently since 16 or so. So in Corona, you had a slight increase, but it's I don't see a tidal wave that we saw previously, and I don't know what will happen to home prices because everywhere you talk to, they're just crazy, man. I mean, like the people that are selling their homes, they have to be purchasing something else, you would think.
Or renting.
Or renting, right. Because they are saying, well, prices are kind of too high now. So, I mean, for me personally, and I've said this on Twitter, so it's not like it's breaking any rules. I sold my property to rent. It's the first time that I've rented a property in my whole entire life before. And that happened during Corona. Like I got a price that I was happy with. See you later. Who knows if that will be who knows if that will end up being the correct move, but the price that I would have to pay for the rent I'm paying here it's just crazy high. So who knows? I mean, that could end up being very smart or dumb.
Yeah, I mean, obviously, no, come on, man, give yourself a little credit. I mean, but I mean, it seems like the only thing. I mean, it's not the only thing, but it just each time you kind of keep going back to like, all right, interest rates, right? Like they're so low that that's why there's 20 offers on some of these homes because most of these people are like, hey, like I don't care.
Purchasing power is a lot.
Yeah, like so what if I'm paying 20-30% more than list? Like, do you see what my interest rate's going to be? Like
exactly, and like
and that's a fixed rate,
right? I mean, that's something that you and I can't control. So I really have not even thought about what could happen or what will happen. Buffett has this term, like to focus on the important and knowable. And it's extremely important, but I'm not smart enough to have it knowable. So it's something I think about, but I don't waste a lot of time with it.
Gotcha. All right. So I want to shift gears to your perspective on your really your investing style in stocks.
Yes.
I would, based on some of the stuff that you sent me prior to our chat today, and especially what you've said today, it sounds like it's not very different. You know, you have a concentrated a real estate book where literally your property is on the same block, and then you have a relatively concentrated portfolio. You know, so how do you think about stock selection? You know, what stocks you look at for potential investment? Love to hear your style there.
Sure. So pre-corona, I was buying a lot of cheap, not the most desirable companies with great managements and moats. I mean, I wouldn't say that was a large portion of my portfolio, but it was some. And Corona now has really taught me that managements are very important and that quality is. So I have my largest single holding is Berkshire Hathaway, and that's a very 1 foot hurdle. I mean, Buffett, the businesses are great. For me, I don't know a lot about technology, so I kind of stay away from that. I really put a lot of emphasis on the jockey, you know. So I have a Facebook stake, and for me, and it sounds crazy, my main thesis on Facebook is you have a guy, Zuckerberg, who is young, he's a genius, and he would rather have a heart attack and die than see his company head to zero. I mean, you have a jockey that is driven and smart and really, really competitive. I mean, that's like obvious. So because I didn't have formal education, Bobby. I didn't have theories and ideologies to kind of wrap my head around capital allocation. So for me, I buy companies that I think I can understand, whether it's military contractors or tobacco or Berkshire Hathaway or Facebook or IAC. Like, I'm putting a lot of emphasis on the jockey. I just try to focus on industries that I feel like will be here for a very long time. Like, military is not really going anywhere. Yeah, the spending is starting to flatten, but whether we like it or not, we have to have this stuff. So, and it's stocks that no one truly likes. I mean, no one except for Lawrence Hamtil truly tweets about Lockheed or Northrop Grumman, which I own. So, for a lot of years, actually, before COVID, I would just purchase stocks on crashes. Like, every 2 years, I figured, well, there's a crash. Like, it happened in 16, it happened in 18, it actually happened in 21. Like, every 2 years, you just have some craziness happen. And I would just store up enough cash to where I could buy this stuff. I'm much more comfortable purchasing when the screen is red. Because I was kind of brought up that way in 2008, and I feel like my edge is not going to be on the ability to read a balance sheet. My edge, if I have one, will be trying to make the right choices when other people are backing out. And it's happened to me in houses. My stock returns haven't been quite as high, but that's just kind of how I think about it.
Cool. Listen, man, that is definitely an edge. Like, just having the stones. I mean, let's be frank.
I mean, to me, to be honest with you, like, it is very tough for me to buy. Like, I hear this quote, like buy high and sell higher. And, like, I'm sure for some people, that's great. I am very comfortable purchasing, like, in March of 2020. Like, I've seen that happen in real estate. So to see it happen in stocks, like, I wasn't that uncomfortable. For me, it's hard in 2021. Like, so the place of red is, if I'm going to have an edge, that's it, hopefully.
Got it. So I mean, let's go back to this most recent, red experience in what was it, March 2020, April 2020. I mean, you must have been like a kid in the candy store at that point, like, how did you decide which one you wanted to just, like, you think back retrospectively, throw a dart, right? Like, yeah.
I mean, I will say my largest buy in March was Disney. My issue for me is I normally get so excited when I see red that I'm usually too early. Like, if there's an issue I have, it's that I'm always a little too, like, in March of 2020, I have to preface this all by saying I did not know about portfolio construction, like sizing of stock. I did not know anything about this. I was just buying, like, if I had cash and I liked it, then buy it. I mean, the fact that that stock was a 10% position or a 20 or a 2 was not something that even crossed, like, I hadn't even heard of it. So my thought process in 2020 was, I don't know what the heck will happen, but I'm going to buy as high quality as I possibly can. Now, quality to you and quality to me and quality to she, I mean, that could be different, but so I sold FedEx at $129. So it's not like it's all peaches and cream, but for me, I saw red. I mean, if you have a limit down day every day for weeks. And if that's not like a thought that someone's hitting you on the head and saying to purchase, then nothing else will. I mean, no one on CNBC was saying to purchase anything, which is probably the reason why you should be. So for me, I saw a 5% day every day, and I'm like, it's time to buy. I mean, I don't know if I'm right now, but in 10 or 20 years, it won't matter. So I sold the airline positions I had, because I just didn't know how that would play out, and just bought, a lot more Berkshire and Facebook and some JP Morgan, and just tried to go as high quality as I could. Like I said, I did not know anything about position sizing. I mean, it was just like, if I have cash, then I'll just use it. I mean, 10% positions. So for me, I was like a kid in a candy store. I was surprised that it was over so quickly, though. Because it was over in April, May? I mean, by then, June, I don't know exactly that point where it goes up, but you had about a month, 2 months, maybe. And then you had some good deals, but the cheap stuff, I think, and I could be wrong on exactly that time frame, but you had to be in there quickly. I mean, you had to move quickly. And no one was, I mean, in times like that, you just have to say to yourself, if no one is telling you to buy, you probably should. I mean, that's not, 100% of the time, but you have to put things kind of together.
But at the end of the day, at least it should be one of those things you're like, oh, okay, that's.
If it's very uncomfortable, that means it's probably right.
Yeah. Well, it's like if it's everyone's saying it's herd mentality, right? And it's just that feeling of wanting to be. I'd say most of us are natural contrarians, right? We're
right, and I think seeing what happened in 2008 prepped me for that. That's a very comfortable place. I mean, it's not comfortable for anyone, but I'm not that uncomfortable.
Right. All right. So moving from there, I mean, what would you say is more difficult to manage? A concentrated book of real estate or a concentrated book of stocks? What do you find keeping you up most at night, if at all?
There is a nice aspect to stocks that you send your money up to management that you trust, and you just let them kind of handle it. I mean, I don't know if one is easier. I will tell you, I'm probably the only person on the planet that I think since COVID, I actually like stocks more than houses now. But it's a different thing, Bobby. Because of the way companies can grow at 20% and rents can't, the emphasis on the buy in real estate, I think, is a little more crucial. I mean, you don't want to ever overpay for a stock, but if you overpay by Google or whatever by 20%, it's growing, or fill in the blank. You're going to get out of it okay eventually. But if you overpay in houses, I mean, the house has no feelings for what you paid for it. So I don't know if one is easier. I mean, there's certain aspects to the aspect to leverage in real estate is pretty attractive. The fact that it's so illiquid kind of lends itself to more long-term holdings, where it's not like in stocks where you can sell 100 shares of Berkshire. So I don't think one is necessarily easier. I will tell you, I think because of the vast liquidity of stocks, there are more times where price and intrinsic value are not correlated, because you can have a forced selling aspect in stocks in 24 hours. That in houses, that doesn't really happen. I mean, the crash in '08 was weird, but like that's not normal. I mean, normally you're just kind of flat and you're just kind of raising. So I think, to be honest with you, I think there's more opportunities in stocks than houses. I mean, the problem with real estate is if you're, and I've had this problem, like if you're going up against other people that have more capital than you, then you're kind of screwed. I mean, you can play in the field that they're not playing in, but it's tough. But in stocks, everyone is somewhat equal-ish. I mean, you know, everything's out there for you. You don't have an aspect in houses. Like, so when you buy a foreclosure, right, there could be people in the house, and it's your job to handle that. So it's January 1st, right? Let's just say that. And you put down your 10% deposit and you go to the house and say, oh, like I purchased your house. Like 8 times out of 10, they slam the door on you. When you still have to pay for that house, regardless if the people are inside it. Where in stocks, it doesn't happen. Like you buy 100 shares of Apple, you have 100 shares of Apple. So my world is a very imperfect world. To further on that point, if you buy a foreclosure, let's just say on January 1st, and you buy that in Maryland, that process until you have to close on it could be 2 months. It could be 10 months. So you are comping a house for today, but you may not be closing on it for 2 months or 10 months. So you don't really know when you're going to take possession of it. You don't really know when the people will leave, and you don't really know when you have to comp the house for. So it's a very imperfect world, where in stocks, like, you know how you stand to a point. So the worlds are just, I'm the only one who goes to the auctions who probably has a college degree. It's a very messy business. I mean, it's not like this. Like, I'm not saying that stocks can't be, but it's a much more especially in my world, it's not a perfect world. And there's certain aspects of buying stocks that are kind of attractive, actually.
Yeah, I mean, buying stocks, I mean, especially if you're kind of buying more blue chippers, which sounds like you were back in
right.
And like, you can sleep, you're like, all right, I don't need to call Bob Iger and get what his forecast plan for, you can do the research and it'll be okay. But like real estate, especially foreclosures, like there's people.
And there's people, and like, so you could buy this house and put your 300,000 out there, or 500 or 200 or 100. And those people are still in that house, and you need to kick them out through the court system. And that takes time. And then you have to hire people to move their stuff. And then, so like, that becomes a real messy thing. You would be surprised how many people buy houses from the auctions that don't even see the houses prior to. It's like buying a stock without doing any research, like zero. I mean, all you know is the name of the thing. So it's an interesting world, man. Like seeing the two worlds, it's very, very interesting. Like you have people in my world who have great sums of money who don't own any stocks. Like all their money is just houses. So it's a cool thing to see, like how the two worlds are.
Right. And I'm sure, when you say messy or imperfect, like when you buy some of these foreclosures, like these are humans too, it's like, And it's just, I mean,
and they're not happy to see you, right? Like
not,
they know
it breaks your heart on one hand, but at the same time, it's like, you know, what am I going to do? You know, like this property's value. And
yeah.
We'll speak to that. Yeah.
I mean, it was a hard thing to see right after college in 2008. The more you see it, the more fortunately, you kind of just don't even think about that aspect because, like, if I don't buy it, then someone else will. So if they can profit on, I like, which is maybe rationalization, but like, we're not doing anything. Like, I don't do anything wrong or break the law or anything. So like, but it is a very sad aspect. You know, like the hardest part is when you see children who's right, like it's not their fault. You know, that their parents have hard times or they made choices that they weren't supposed to do. I saw the toughest part of that in 2008. And the more you do it, the more you just kind of get accustomed to it. Because you don't really have the time to think about it. Like the first 2 or 3 years, I was seeing 140 properties a week. Like I was seeing 20 houses a day. So you're doing so much work that the time to think about the other people, like unfortunately, like you can't have that mentality and survive in this industry. Like I'm unfortunately just a little too nice. But a lot of people in my world can be brutal, man.
I can only imagine. You know, but you know, one question I have for you, and you've alluded to this a few times as well already. You know how you really learned a lot in 08. You know, I mean, would you say just being there in 08 was an investing experience that impacted your career the most, or is there anything in particular, you know, on the real estate or stock investing side that you're like, wow, I'll never forget that. That's staying with me for the rest of my career.
Yeah, that's a good one. I mean, the 08 experience was probably an MBA. I mean, and I don't know what an MBA course is, but there are certain things that I don't think you can really teach.
Someone who has an MBA, I'll co-sign that one.
Sure. And it's so funny because I always had like a chip on my shoulder because like everyone on FinTwit like has an MBA or they're a CFP or Series 7 or blah, 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 where I'm just like a guy. And you often think that you have not as much information, but I can tell you that 08 was just being thrown into the pool and you either sink or swim. So that was an MBA just in itself. I mean, like the whole 08 through 2012 of me starting off with this and going and wholesaling and this and that. I kind of just not made it up as I went along, but kind of did what I felt was smart. And so that was one aspect of it. And the other aspect that kind of helped me was, frankly, I mean, it's horrible to say this, but the whole Corona shutdown, if that hadn't happened, I wouldn't have turned to Twitter because I was bored and didn't have anything to do and thought that I should learn a lot more about businesses. And so I started to read, and then I read I probably have read 30, 40 books. So I've had the 08 experience was a full-on MBA. And kind of like the March of 2020 till now has been kind of the other part of that where, you know, I can talk to people like you or Science of Hitting, Alex, or so for me, like that aspect has been kind of the other half of it. To see how the two worlds are, try to take the aspects that I think that I can wrap my hands around and and just see what happens, man.
Very good. All right, man. Well, look, to close this out here today, What advice would you have for folks out here listening that looking at either the foreclosure market, real estate in general, investing? What advice would you have?
Right. I mean, for me, I kind of take what the defense hands me, and I don't try to be like a John Elway and just like sling it in. I really take what the defense hands me, and having 1 foot hurdles, there's something to be said. I recognize that there will be other allocators that are much better than I am. But investing for me is like kind of driving around the highway. And as long as you make it around, then you'll be okay. It's sometimes that you think other people have Ferraris and they only have a quarter tank of gas in there. So don't try to, I would say, kind of take what the defense hands you. Don't buy anything if you don't know about the company, because if you don't know anything about the company, when it comes to crunch time, you're not going to have a clue. And that's the big thing with me is I take, like, when people on Twitter, have a stock that they like, and it's coming from someone who's smart, it's very tough to say no. And I think if you don't understand it, it's probably, or can kind of put your hands around it, it's probably not the right call. In terms of real estate and foreclosures, to be honest with you, I don't have a clue. I mean, it's extremely hard, man. Like, it's very hard right now. You have a lot of cash chasing very few assets. And I'm not saying that there's going to be anything terrible that happens, but I'm just don't want to hold that hot potato in the end. So take what the defense hands you. Try to use temperament to your advantage. There's a YouTube clip that Buffett has at the University of Georgia that I've tweeted out, and it was my only formal stock education, and I've seen it 100 times, and I'll tweet it again. But if you watch that clip at University of Georgia, and I've seen it 100 times, just hear the whole thing, and that's how I think about it. Buy companies that you can understand, buy companies that at least are producing cash, have the prospects to, buy companies that have high quality managers. I think if you do those things and you invest over the very long term and don't use margin, then you're probably okay.
All right. Well, with that, Jason, where can our audience go and follow you on social media and to get more information on your insights and your thoughts?
Yeah, I'm on J Greenwald 86 Greenwald Capital on Twitter.
Very good. Well, Jason, it's been an awesome speaking with you today. I really do appreciate it. Good luck. Continue to stay safe. And I look forward to our next update.
All right, man. I appreciate it, Bobby. Have a great one, man.
Thank you. You too.
See you, man.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.